Did Jerome Powell blow it this week? Are markets toast and heading lower? There's only one possible way that this market heads higher. Welcome to the Ready Set Trade Market Minute for Sunday, the 18th of December. Here's the S&P 500 chart on the daily time frame. What I've been talking about for the last few weeks is the character of this market after a 600-point rally is that the reversal will start based on a lower high. Here's another 600-point rally. Here is a lower high, lower low transition. So these always are the nastiest events out there when the market's rallying, when everybody is optimistic and positive, and all of a sudden a bomb is dropped on the market. In this case, this was Jackson Hole. This was a CPI that was a little too hot. And both of those created a lower high movement that caused a lot of distribution to the downside. And this is the pattern in bear markets. So we've not escaped that pattern yet. So here is the latest lower high. Now this was an equal high on the SPX cash index. This was actually a higher high that reversed way back down on the S&P 500 futures. But regardless, it had the same effect. It had everybody leaning long because that CPI that came in on Tuesday was very low or much lower than expected, showing that we may be hitting the apogee of inflation. Inflation may be topping out on a month-to-month basis. So we might start to see this heading much, much lower. But what we find out on Wednesday is the Fed doesn't care that this is starting to come back down. They've got their targets and they're just going to keep the blinders on and nose to the grindstone, and they're just going to keep on raising rates until they hit their inflation target. They don't care about things like the CPI and the PPE. So we as investors had been looking at these numbers for the longest time thinking, well, as soon as they hit the right pattern, the Fed is going to be forced to become more dovish. And that's wrong. The Fed is on a mission right now, and apparently they don't care that they're going to introduce negative effects into the market, which is another way of saying selling. Okay, now that my rant is over, let's take a look at the chart from a different perspective. What can we find here in terms of potential places of support? Could we actually see this price print a higher low, get everybody all negative this week, print a higher low, and then take off again? Remember, what's the trend here? The trend is still to make lower highs and lower lows on the weekly chart. This has been happening since the beginning of the year. Lower highs and lower lows all the way along here. Now, I can't imagine a more negative thing than what just happened this week to disappoint millions of investors, firms, everybody that thought the Fed was going to be much more willing to work with us than they are. So there's a general malaise about the market, and we've seen this in the way that it closed through the last week. Thursday and Friday were particularly bad. But let me ask you this, what were to happen should the price put in a higher low and then start to rise? Now, I have no clue as to what kind of positive catalyst would cause that to happen. Sometimes markets just move on their own like this, just because there's so many people on the wrong side of the boat. It gets unbalanced and then it ends up going in the opposite direction. So I just want you to keep that in mind as a potential outcome from the next 2 weeks that we could see. Until we see certain levels breached, then there's still a possibility to see a higher low, higher high combination in the market. All right, so that may just be unfounded optimism, but let's go ahead back to the daily chart and set up those price levels. One of the best ways to do this is just through fib retracement. So I'm going to go from the very bottom of this move up to the very top, just about 4,100. And typically what we will see is price support come in at 38.2, 50%, or as far down as 61.8. Now that is the point of no return for the bulls. If the price were to breach 37.24, then it's over, because what we're probably going to see the price do is fill in the triangle. This is the triangle like this. So This level must hold. And as long as this level does hold, we still have the possibility of seeing some form of higher low come along here, which reverts higher. Now, here's a data point which may make the difference. We do have the daily chart on this triple fractal potentially into exhaustion, and maybe more so as we get into Monday. So the move to the downside, even though this has been relatively violent, almost 300 points to the downside, may be over for right now. Range expansion moves to range contraction, which moves to range expansion again. So we may move into a range contraction, and we've seen this before. When we get these prices into exhaustion to the downside, they will go in the opposite direction momentarily. So we may see this rise up into another lower high, and that could either, of course, drop into another lower high, lower low combination, or we could actually see this slingshot higher from there. Again, we just don't know what kind of exogenous event may introduce itself into the market and create a massive short covering opportunity to the upside. Again, when everybody is negative, you got to look to the opposite side and say, what would cause this to happen? Otherwise, I think the path of least resistance right now, no pun intended, is to the downside. One last thing I want to bring to your attention is volume profile. And so volume profile, we've just lost the point of control for the entire year. So there's been more trading around this level here between 39.50 and 4,000 than any other price point during the year. You can see how many times this has been around this price point, and it does tend to create support and resistance. Now, this is support as long as it's above that level. Now that it's lost that level, that becomes resistance. So now we look for the next high volume node. That's going to be somewhere just north of 37.50. Now, this is the ES, and so that's going to be perhaps 25, 30 points different right now from the cash index. So keep that in mind, that the numbers are not normalized. So we could find some support down here at this next level, which could be the potential launching point, or it may just forestall the eventual drop into the lows of the year. So when I typically see a low level like this, it's almost like a vacuum. The price tends to run right through this level. It has not done this so far, but this could be a very quick move to get down here to about 37.50 on the ES. And then we'll see if that provides the next support level as well. Watch the futures on Sunday night, of course, into Monday morning. And we'll see you guys this Thursday for the next Market Minute. Thanks for listening.